SE Atrium, SingPost, Sasseur REIT, and CSE Global. Here's the deep dive Singaporean investors need today. Let's start with SE Atrium. Big news here as their offshore jackup designer scored an international tender from International Maritime Industries. This deal involves supplying equipment and licensing for a drilling unit, marking the first new construction project for the shipyard since its opening. It's a significant win that could position SE Atrium for more global opportunities in the offshore energy sector. However, the market didn't seem too excited. SE Atrium shares dipped 0.4%, closing at 255 on Wednesday. Could this be a case of short-term market reaction to long-term potential? Next up is SingPost, Singapore's national postal service provider. Their Q3 results are a mixed bag. Operating profit fell sharply by 23.8% to $21.1 million compared to last year, reflecting challenges in their core postal business. But there's a silver lining. Group revenue jumped 12.1% to $510.6 million, driven by strong contributions from their Australia business and property leasing segment. Despite these gains, investor sentiment remained lukewarm as SingPost shares dropped 0.9% to 0.56 stocks. The question now is whether SingPost can sustain its revenue growth while addressing profitability concerns. Now let's talk about Sasseur REIT, a name familiar to income-focused investors. They reported a slight increase in their distribution per unit, DPU, to 0.02929 for the second half of 2023, up from 0.02927 in the same period last year. This growth was supported by resilient rental income under the Entrusted Management Agreement (EMA) model, which saw a modest 0.8% increase to 335.1 million yuan, still $61.8 million. While these numbers reflect stability, it seems investors were looking for more robust growth. Units of Sasseur REIT slipped 0.7%, closing at 0.69 on Wednesday. Finally, CSE Global, the systems integrator that specializes in tech solutions across various industries. The company secured $235.3 million worth of new orders in Q4 2023, but this represents a 21.6% decline compared to the same period last year when they brought in $300.3 million in orders. The steepest drop came from their electrification segment, which saw orders fall by 31% year-on-year to $139.8 million in Q4 alone. Despite these challenges, CSE Global shares held steady at $465 on Wednesday, suggesting that investors might be taking a wait-and-see approach. So, what's the takeaway? SE Atrium's big win could signal long-term growth opportunities despite short-term market reactions. SingPost faces profitability challenges but shows promise with revenue growth from its overseas ventures and property leasing business. Sasseur REIT continues to deliver stable returns but may need stronger growth to excite investors further. As for CSE Global, declining order intake raises questions about future performance in key segments like electrification. What do you think about these updates? Are these stocks worth adding to your portfolio or staying on the sidelines? Share your thoughts below. We'd love to hear from you.